Is a recession happening in the United Kingdom? How do central banks decide on this, and why is it so hard to call out? British Chancellor Kwasi Kwarteng unveiled the country's largest tax cut initiative in 50 years in an effort to stimulate economic growth. Calm down, something intriguing has been presented to you by Darkness Unraveled. Let's delve into the video. The Bank of England announced this week that the UK may already be in recession. However, this news has been overshadowed by the so-called mini-budget. It's no surprise that this comment from the central bank was buried in all the stories about the pound's sudden crash and the general volatility of financial markets. But it does highlight the challenges of trying to determine whether or not an economy has entered a recession. So what caused the bank to make such a statement? On September 22, a majority, 5-4, of the Bank of England's Monetary Policy Committee voted to raise base rate from 1.75 to 2.25%. Keep in mind that this rate has already been raised a couple of times and was 0.5% less than half a year ago. The sudden increase was an attempt to tame inflation. However, this rate paid by financial institutions also affects the interest rates consumers pay on consumer loans and savings accounts. It reached its greatest point since the global financial crisis of 2007-2008. The bank has been diligently working on this since December 2021, and further spikes in this rate are anticipated to bring surging inflation back towards its 2% target. Recognizing and agreeing on recessions is challenging since there is no common definition. Although different countries and academics may have different definitions of a recession, a practical definition of a recession is 2 consecutive quarters of declining real gross domestic product in a country. Consistent GDP data indicating a drop in economic activity is therefore widely understood to be bad news, as it suggests the economy is contracting. Typically, this is followed by a rise in unemployment as consumer spending falls and company confidence drops. Another hint of a downturn is that banks and financial institutions start tightening their lending requirements, making it difficult to secure mortgages and business funding. The housing market and local businesses will feel the effects of this. Because economies do not typically recover quickly from a recession, a period of prolonged depressed economic activity could lead to long-term unemployment. This would negatively impact people's chances of future employment and earnings growth, especially among the younger generation and those from low-income households. This employment scarring can have a social and economic impact on an individual and might be detrimental to the job market. It shouldn't come as a surprise that the Bank of England is sounding the recession alarm before it has all the data. Determining whether a country is experiencing a recession or expansion is not as simple as you might think. To begin with, it's important to note that the Bank of England, the Office for National Statistics, and other agencies around the world are releasing preliminary data, especially when they are first published for the relevant quarter. This indicates that these records may undergo changes in the future. One problem policymakers encounter when making judgments in real time is the uncertainty of real-time data. What this means is that the central bank's view of the economy is fluid and often contradictory, and as a result, their judgments are subject to considerable uncertainty. Second, negative growth that is accompanied by otherwise good labor market conditions and spending isn't per se a bad sign for the economy, as recently stated by U.S. Treasury Secretary Janet Yellen. If we look at a wide range of indicators, we often get a different image of the economy than we would get if we relied solely on GDP, which is what she implies here. In that case, what does the Bank of England currently think about the status of the British economy? According to its most recent meeting, the board members agreed that the recent deterioration in business surveys was consistent with their expectation of a deceleration in underlying growth in the third quarter of 2022. These business surveys show almost no increase in the near future, and a key indicator of expected company activity declined between June and August of 2022. The bank added that sluggish demand and slow manufacturing output growth were harming the economy. Meanwhile, reports indicate that companies are less likely to invest in the future due to concerns over demand and the economy more generally, as well as growing expenses. The Bank of England is utilizing a wide variety of metrics to illustrate a contracting economy. The bank has stated that it will be keeping a careful eye on future data and the development of Kwarteng's growth plan policies announced on September 23. It anticipates that the latter will provide more than a modest boost to a faltering economy. Is it possible to predict what sort of effects a recession will have on the economy? Although a decrease in GDP in 2 consecutive quarters may seem theoretical, it has effects on the economy as a whole, including employment, housing, and investment. With spiraling inflation and energy price hikes, incomes may not be enough to pay the cost of basic essentials. Businesses cutting costs during a recession could imply job losses. What other factors could trigger a recession? The current financial crisis in the UK can be linked to a number of interrelated causes. On their own, they pose substantial difficulties but are generally not catastrophic. However, all combined, it's a different story. The current volatile climate may be about to take another downturn due to the cumulative effects of the UK's multiple lockdowns on the economy and Russia's invasion of Ukraine and its effects on the worldwide market price of gas and oil. Additionally, increasing energy prices are expected to significantly stoke inflation in the coming months and indicate that the economy faces a lengthy period of poor growth. Firms have retrenched in response to Russia's invasion of Ukraine, soaring inflation and continued supply chain disruption souring the trading environment, lowering UK growth expectations. The bank warned that the rise in energy prices caused by Russia's gas limitations will aggravate the reduction in real wages for UK families. Consumers are drastically cutting back on spending as a result of a once-in-a-generation cost of living pressure. We can say that the future looks bleak for a consumer-driven economy. What does this plummeting of the pound mean for the UK? Every day, investors all across the world deal with massive quantities of foreign cash. What customers obtain at the bank, post office, or foreign exchange is based on the rate at which investors trade currencies. When planning a trip abroad, many people don't give currency conversion much thought until it's time to actually make the transaction. If the value of £1 in foreign currency decreases, the cost of purchases made overseas will increase. A decline in the value of the pound has an impact on family budgets as well, as the price of imported products increases. In addition, a decline in the value of the pound can increase the cost of refueling your vehicle, since the price of oil is quoted in dollars. It's possible that the price of imported tech products like the iPhone will rise in the UK. Even though something is manufactured in the UK, if its components are purchased from elsewhere, the final price may be significantly higher. According to Jane Foley of Rabobank, this is because of investors selling the pound due to uncertainty about the government's plans. They are concerned that the recently promised tax cuts would not be fully funded, she explained. From a little over 1% in January to over 4% currently, the rate of interest on 10-year bonds, which governments sell to investors, has grown steadily. However, borrowers may end up with less disposable income if interest rates are increased. So when will it stop? It is predicted that the recession will continue throughout all of next year if global wholesale energy prices remain at their current levels, with inflation just below 10%. This is the sort of prognosis that in other circumstances may have necessitated an urgent emergency budget. It might upend all the ideas. This will call the anticipated economic decline in the United Kingdom a true full-fat recession and a classic illustration of stagflation. To whom do you attribute most of the blame for the impending UK recession? Tell us what you think in the comment box that can be found below. We truly hope that you had a good time watching the video. Additionally, we rely on the support of our audience. Therefore, viewers, please subscribe to our channel so that you can watch more incredible videos. You can also check out our other videos that have been specially selected for you. We'll catch up in the next video.